Hey guys, February 13th, and in this video on February 13th, 13 market moves is going to give you a perfect shorting opportunity that just screams to be shorted right now, guys. But before we dive in this close to exactly which stock that begs to be shorted immediately at the market open this morning, I want to describe to you a little bit of a correlation that we're looking at and describe to you a way bigger trade than just shorting this particular stock to give you a little better understanding of how these candles could play out over the course of the next 7 to 10 days. So the price of natural gas, clearly, you would have partaken in some of the short with us if you were trading with 13 Market Moves Coach. And at this point, considering the huge drop all the way from 10 bucks all the way down to 2, you're probably wondering, hey, is this a good time to actually go long? Because there are indeed some bullish signs. Some of you may look at this and say, well, it's oversold. Well, this has started to look bullish right here. Well, it looks like it hit the bottom. And so all these arguments are valid. However, you got to look at the context. You got to look at the context of the trade. And natural gas is unlikely to bounce significantly from this level. And we'll look at some other supporting charts, such as stocks that are heavily engaged in natural gas sales. They look absolutely shocking, guys. So for that reason, we don't believe natural gas is going to bounce anytime soon from here. But we think it could actually stage a multi-year low, breaking below the level of 2.4. So 2.4, lately we had a couple of dips just under that to 2.38. We bounced out of those slightly, but those bounces, they're not sustainable. Look at this, couple of tiny little bounces, and they're followed by this huge red candle. So even though technically it makes sense to go long here, this is not the time. It's not the time yet. And historically, natural gas prices, they are somewhat correlated, and sometimes we can predict what happens next in oil. And for that reason, you should understand the overall picture in Europe. A lot of plants, a lot of companies have switched recently from using natural gas because the prices were $10. They switched their plants to operate on some kind of variation of oil, and that's about to come to an end. So we're going to see a diminished, basically demand in some parts of the world for oil. And more importantly, when we look at the price of oil itself, here it looks absolutely ripe for the taking on the short side. Okay, a couple of reasons for that. On last week, we have earthquake in Turkey, which is highly favorable for oil prices higher. We have basically Russia cutting 500,000 of barrels a day. And when you look at it overall, it's like, hey, so many positive things for oil. But yet, on the day when the oil price cuts are announced, oil basically does nothing. It actually tries to stage a huge reversal. We actually taken a short on oil at 80 bucks on a Friday. Instantly after we took the trade, guys, oil dumps to like 78.5. That was a 3x trade on a early Friday morning. So not looking so bullish considering what's hit in the market. Considering what has hit the oil market last week, oil should have gone way, way higher. So what I'm basically describing to you here, guys, is a basic case of a divergence. Oil should have rocketed maybe to 82, 84 on all the positive developments for the oil market last week, but it didn't do anything. It barely moved a couple of dollars on 500,000 barrel cut. I mean, that is a huge catalyst for oil normally to move higher, but it didn't do anything. And when you look at the price of gas, the gas chart I just shown you, you combine it with this divergence in oil, it tells us that there could be a huge drop in oil. So for some of those of you probably looked at our video. We had a bunch of traders make money on the oil short right here. It was tempting for you to go and just go ahead and put another short on oil right after that. Well, sometimes understand the market structure. Sometimes things have to go higher in order for them to drop in a bigger way. So if you study the oil chart, there is a probability that out of the next 10 days, guys, oil is going to drop 6 to 7 days. So in order to illustrate that, let me show you similar pattern that develops pretty much each time we look at oil chart over the last 6 months approximately. So got a time frame right here where oil hits this 92 level, and look what happens next. The story, the rule of the 3 candles. 1, 2, 3. Okay, here's 3 candles, 3 red candles, followed by a pause, followed by 1, 2, 3, 3 red candles. You get 7 trading days in oil, only 1 positive day. Okay, very similar structure right here once it creates this last candle, which the point of this candle and this candle, for comparison purposes, we can almost call that the candle we got on a Friday is identical. It doesn't look quite identical in the size, right? But we're actually using this as a tool, as a divergence tool to go short here, while the market seems to be so highly positive for oil prices to move higher. We're saying this candle is an equivalent of this and this candle. And if we're correct in that, what happens next is at least a 3-day drop in oil, okay, followed by 1-2 days of indifference, a slight bounce, followed by 1 huge red candle, followed by potentially 4 red candles from there. We're going to this sort of move in oil. But the question is, okay, just like some of the guys that traded with me during the channel, during the trading challenge, and they made a bunch of money, right? This oil trade right here, guys, had to be timed perfectly. So in other words, you can't just go in and just short stuff automatically every freaking day. That strategy is not going to work. Your goal is to identify those perfect instances where that initial move can begin. And your goal is to stay with the move, which a lot of you, I promise you, in real life environment, once it does this and it bounces, you're going to be tempted to get the hell out and so on. But then by doing so, what you're going to do is you're going to miss this entire move. Sometimes traders ask me, Leo, well, why didn't we cash out here? And why didn't we, if you're going to keep jumping in, out of trades, you're going to miss on what seems to be a fake out, breakout higher. You're going to miss on this entire move lower. And that's the part of the move that pays you a ton of money. So be ready, guys. Everything here is telling us that there is a huge elevated probability of 6 to 7 days lower out of the next 10 days in oil. However, that information doesn't give you here the exact entry, the exact exit. So if you'd like to make sure you don't miss the next 20, 40x on oil, guys, make sure you sign up to trade with the 13 Market Moves coach by visiting 13marketmoves.com. Now, for those of you that stayed for this lengthy explanation of the correlation between the natural gas and oil chart and how the natural gas inability to bounce off multi-year lows is telling us that the next chart to drop in a meaningful way, combining with all the patterns here, would be oil. Well, there is one stock in particular that looks incredibly ripe for the taking, that you could take as a result of the information I've just described to you, and that is the stock of LNG. For those of you who are unfamiliar with LNG, LNG has been the absolute winner for exporting natural gas into Europe from the United States. It transports liquefied gas. Now, needless to say that throughout the last year, the stock has done exceptionally well, hit some highs of 180 and so on. But in relation to the drop in the price of natural gas lately, it hasn't done a whole lot. It's been able to maintain this level about 150 bucks. Now, if you've taken our Charts and Divergences course, if you've taken our crypto course, okay, you guys know that crypto course deals with entries and exits. Particularly right here, guys, you've got a multi-top formation. But also, if you study the crypto course about the entries and exits, you would know this also represents a tornado pattern, a perfect tornado pattern. 1, 2, 3, 4. When the final time on the final bounce, okay, of this candle, it cannot exceed the level of the prior candles, okay? This is your sign, okay? This is your sign to go ahead and short the hell out of this thing. Now, notice what's also forming on this chart is this bearish cross. It coincides with the same time, okay, we got a multi-top formation, being confirmed. At the same time, we got the tornado pattern being confirmed. And at the same time, where we got absolute inability of the RSI to move higher despite of the stock being able to maintain this solid level of 150. We got bear crossover in MACD. There's absolutely nothing bullish on this chart. So this is the chart, LNG, guys. Straight up, you buy 155, 150 strike puts. And if you are curious how long you should actually hold this thing to play out, when should you actually exit the trade for the absolute maximum profit, guys, visit 13marketmoves.com, sign up for a free call, 20-minute call with a coach here at 13 Market Moves. Get this done, guys. This is an easy trade, 3 charts. Okay, this is an easy trade you can put together. If you're looking to put together more meaningful trades, I mean, this could be, depending on what you're paying for your options and the strikes you select. I mean, this could be LNG trade, could be a 5x trade. It could be a 3x, could be a 6, 7x, depending on how fast the drop could accelerate over the course of this week. But oil, depending on your entries and exits on oil, guys, this could be a 20, 40x. So I invite you to get in touch with us. Don't miss this trade. Sign up today. Okay, maybe you missed the trade-in challenge and now you're wondering, oh, damn it, Leo, I should have signed up. Damn right, you should have signed up. So I'm giving you another chance to make a bunch of money. Sign up at 13marketmoves.com today. And don't miss this potential 20x to 40x opportunity this week. Let's roll, guys. I'll see you in the next video soon.